Okay, so this is try number two. The first time my mic was not working the whole time. So we'll try here again. I'm actually traveling. I'm in a hotel, so I don't have all my equipment, but hopefully you'll be able to hear this one. So I was talking about Etsy setting up for a possible swing trade. And Etsy has been on a major uptrend here for a while. Hold on one second here. Hold on one second here. Okay. So Etsy has been on this major uptrend. Let me share the screen here. Okay, so Etsy has been on a major uptrend, and you see here it's started down here in April 20 and just been climbing up mainly due to COVID. COVID sales accelerated Etsy. You see here kind of like the interest in Etsy. It still hasn't decreased. There's still a lot of interest. There's still some people that have a bullish thesis for Etsy, and they talk about its gross merchandise sale has increased over the years. I think it's a little bit overvalued, but I do think it does bring a possible opportunity here for a swing trade. And if we look here, it topped off here and just flushed down. So I want to see it. I would love to see it bounce down here 170, but I don't think it's going to make it down to 170. But there is, you see here where I set this red line here, and you see all the volume down here. There's a lot of support in 170. I'll be honest, the I think the best play for Etsy right now, because it's so volatile, the market, I would say selling a put at 170 would be the best play for Etsy. And what that would do, this would only work if you're bullish on Etsy and you feel that Etsy is going to continue to climb up and reverse after the market gets better. But selling a put at 170, if the price drops below 170 and you get exercised, you have to buy for each contract 100 shares of Etsy. So if you buy three contracts, you're going to own 300 shares. But if it doesn't, and your bullish thesis was right, and let's say we go here to the January 1st, 170 puts, and we sell the that contract. Each contract is $300. So if you sell three of them, um, that's $900 of credit that you receive. Now, if the stock drops below 170, you're going to be exercised and you have to buy the stock. And if the stock kind of bounces here, where I think there's going to be some support and goes back on an uptrend, then you basically keep that credit of the $900 or 300 per contract, however many you bought. But in order for you to take this swing trade, you have to kind of be bullish and believe that Etsy is not overvalued. Someone brought this ticker up. I do think Etsy is overvalued. I think the best play is here at 170. So, and the P ratio is 66, EBITDA is 54. Uh, Compared to its sector, it seems it's a little overvalued right now, but it is. If you're bullish on it, selling a put during this market would be the best course of action. So ISIG is another stock ticker that was brought up. So in pre-market, it's yesterday it spiked up from 5 to 739, formed like a bull flag opportunity here, and just kind of went on an uptrend. So it was on an uptrend. You see here, bounced, hit resistance here, then hit support, went back up, back down, up, then found support again. And now this area of support, it broke it and it's becoming resistance. So I think it's on a downtrend now. So I would probably be careful. And if you're going to trade ISIG, I would recommend waiting for it to go back on the uptrend. Right now, if this ticker was brought up and someone asked me about this ticker, I don't feel too confident about this because it broke this pattern of being on an uptrend. The pattern broke here and now it's becoming resistance. So if it bounces here again and it hits this and this is still resistance, it's probably going to flush and sell off. So you still have some people that are locked in here that are hopeful that it keeps going up, and they're hopeful that they can make profit because they have FOMO. They may have missed the big climb that here, and once they see that this is still resistance, then it'll flush and people are start selling out of their position. So be careful with that. Don't get in this unless it establishes an uptrend, or you can do a dip buy. If it does flush, then I would say 823 would be a good opportunity. This area here, 839, set a limit. If it flushes and you get filled at 839, then expect a little bounce back up. And if you don't get filled, then don't worry about it. You don't lose money unless you buy the stock. So that's how I would play. This is one stock that somebody brought up. Again, it's the uptrend is broken. Now, the another stock that someone brought to my attention is ACAD, and I do like ACAD. I think I was talking about this before I realized my mic wasn't working. And ACAD, it came out with some news aftermarket and spiked up from 1943 all the way to a high of 2543. And I set these letters here to show that this looks like it's forming the ABCD pattern. And this is one of my most favorite patterns because they're fairly predictable. So ABCD pattern for me is it spikes up to wherever the high is. So the high here was 2547. Then it pulls back. Now, I use this is what I use. This is where I use the Fibonacci retracement. The Fibonacci retracement for me, I use it if it gives back too much of a percentage, then I'm not interested in this play. It doesn't mean that there's no strategy for it. And the sound is fine now. Good, good, good. Okay. Glad that the sound is finally working. So for me, if I'm gonna play an ABCD pattern, if it retraces way too much, like over 60%, all the way down here to the 78%, then I don't feel comfortable trading it no more anymore. You have to understand that with day trading, there's only small opportunities, and you can't day trade every single day, every single trade, every single breakout. You're going to end up losing money at the end of the year. You should just have a couple of patterns that you're comfortable with, that you recognize, and wait till they come to you. And when they come to you, you trade them. So I've done several videos on this type of pattern, and I think if you're not in this trade now, then it's too late. But at least tomorrow, I want you to if you can check out ACAD and to see if it actually formed this ABCD pattern, and it could be like a good learning lesson at least. So for me, a ABCD pattern, it has an initial spike. There's some sort of catalyst. There's some sort of extra volume. So you see here, look at the volume bars. There's a lot of high interest. Look at this volume bar here. Look at this volume bar here. And if you go back far, there's not as much volume, except here there was a lot of volume and it had a spike. So there's extra volume. There's a catalyst. The catalyst is that their phase 3 had some improvement in their Rett syndrome patients. So this is the A, the initial spike. Then the way you know where B is finding the low. And then when the next lows become higher lows, then you know that this was the B and this will be the C area. So for example, this low wick here, this wick here is higher than this low. This is higher than this low. And the lows keep on getting higher. So then you know your pattern is forming. So the way you play it is you should get in here around the C area. So if you get in here, let's say 2374, your risk is the low of B, which is 2319. So 2319 to 2374, it's only about a 50-cent risk. So you're risking 50 cents, and what you're waiting for is the break of A. So it's not there yet. So the pattern is not complete. So I think for you guys, if you get in this, you may be a little late. Usually you want to get in here, but if you find the opportunity to get in here tomorrow morning when this opens here at 2471, then you still have an opportunity to make money, but you have a higher risk. So now your risk is about 1 point to make 1 point. So you're here at 2473. Your risk is about 2360, probably this area here. You don't want to wait till it goes all the way below the B at that point because you just don't want to lose that much. So adjust your shares of how many you want to purchase according to how much you're comfortable losing. So if you're only comfortable losing $200, then just buy 200 shares. And if it drops, then you've lost a point. But if it if it if it does complete its ABCD pattern, which all the signs show that this pattern has about close to a 70% probability of being successful, because it has a catalyst, because it has the extra volume, because it didn't give back more than 60% of its returns, and it's forming higher lows. I can see this tomorrow easily breaking this 2544. And then once it breaks the high of this A, then this would be D. Then at that point, I would sell half and just hold the other to see if it continues to get momentum. More than likely, once it breaks D, it has like a little bit of a spike, but then it gives it all back. So that's kind of the risk for that. And that's it. So look at ACAD tomorrow. I think it's gonna break that 2544, 2545. And even if you don't trade it, at least it's a good lesson in the ABCD pattern. All right. Thank you for joining me. See you on the next trade.